Hello and welcome. It's Declan back with another video. And before I discuss JP Morgan, Chase, and Wells Fargo share price and show you the stock market chart, I'd really appreciate if you considered subscribing to the YouTube channel and hitting the like button if you gained value from this video. I'm just a small channel. I started my YouTube journey there about 14 months ago, and yeah, I'm enjoying it so far. So yeah, I'll just take you into the charts now and discuss JP Morgan and Wells Fargo. So I'm just on the JP Morgan stock market chart here on the daily performance on Finviz at the moment. So you can see around just December of 2022, JP Morgan was at its highest. It was up just over the $170 mark. It was trading well above the SMA, the EMA, or sorry, the 20-day, the 50-day, and 200-day SMA. It was trading well above both. But as of 2022, there was quite a significant decline, and it traded down all the way from 170 down around 139.64 before going back up again in the next month or two up to around the 150 mark. But it's been on a steady decline since, and it hasn't really improved that much as the year went on. Like it's trading as of the end of trading on Friday. Today is Saturday. The markets are now closed. It was trading ended at 111.19. So the performance per week, it's up 4.92. Yeah, because the earnings beat was good. That made the share price draw up the share price a bit, not a huge amount, but a bit. So the performance per month, it's minus 5.67. Performance per quarter, it's minus 0.54. Performance per half year, minus 11.84. And performance per year to date, the most important one, minus 29.78. Yeah, so it's minus 29.78 of a return for anyone that did hold it for over a year or thereabouts. So the 52-week range, it traded from $101.28 up to 172.96, as you could see, as I showed you on the chart there a minute ago. So I just have an article here I'm going to show you now on JP Morgan, and this was released, and this is on the msn.com website, another very good website for stock analysis, etc. So JP Morgan CEO Jamie Dimon cautioned of significant headwinds to the global economy as the biggest US bank set aside near $1 billion to cover potentially bad loans. Yeah, so JP Morgan is worried about bad loans or people defaulting on their loans, and they're expecting it over the next year. So that's what that's referring to. So JP Morgan Chase posted better than expected third quarter earnings on Friday, while setting aside nearly $1 billion to cover potentially bad loans in the weakening domestic economy, as income from rising interest rates offset a slump in global deal making. Sorry, I think I'm a bit too close to my microphone. That's why you might hear a tingling noise. Apologies for that. So I'll step back. So JP Morgan said earnings for the 3 months ending in September were pegged at $3.32 per share, down 11.2% from the same period last year, but firmly ahead of the street's consensus forecast of 2.89 per share. Yeah, that's quite an improvement. So JP Morgan, so the managed revenues, JP Morgan said, rose 7.5% to 32.7 billion, ahead of analyst estimates of 32.3 billion tally, while net interest income rose 33% to 17.6 billion. Investment banking fees, JP Morgan said, fell 43% to just 1.7 billion. So yeah, there's been mixed news over the year with JP Morgan. Merger activity down 55%. That's quite a bit. And also, according to Refinitiv data, while just 692 billion in deals were completed, the lowest total since the second quarter of 2020 and the biggest year-on-year declines in 2009. I don't know what my microphone is doing. It's doing some screeching. So here we go. So I'll just go on to Wells Fargo now, just a quick run through Wells Fargo. So Wells Fargo shares jumped 3% as bank tops expectations despite booming loan loss revenues. Again, same thing here. The loan people defaulting on their loans. Wells Fargo third quarter profits were hurt by a decision to boost loan loss reserves. So they had to take those losses. The bank set aside 884 million for credit losses after reducing its provisions by 1.4 billion a year ago. Wells Fargo said Friday that it is still seeing historically low loan delinquencies, but it made a decision to build up reserves as the economy slows, cutting into its third quarter profits. Wells Fargo shares were up more than 3% as results topped expectations. So this is just a quick rundown through of how they did. Earnings per share 130 adjusted versus 109, which were expected. Revenue 19.51 billion versus 18.78 expected. So yeah, both Wells Fargo and JP Morgan, things improved for both these companies in some areas, and they've had to take loan losses, as I've just talked about. So like, as I said, the share prices were up because the revenues were up overall. So yeah, I hope you enjoyed my analysis of Wells Fargo and JP Morgan and how their share prices have done following their earnings this past week, and the articles and the charts and everything I've showed you over the past number of minutes. So please consider subscribing to my YouTube channel. It'd help grow my channel, and please it'd help share the video with more people. I'd really appreciate it. It's only down there, very easily done, doesn't cost you a cent. Go on, please do it.